Alright, super quick update on Solana. So in yesterday's video, we were talking about how I believe Solana is topping out, and since this update, it has started to come down about 10%. Now, we did extensive analysis on this yesterday, so I really want to update you on 2 or 3 things. Number one, if we do come over to the 4-hour time frame, you can see this huge straight run up that ensued in this rally, and of course, right now, we have a spiky top. This is, ladies and gentlemen, a Bart pattern. Now, this would be indicative that we would be heading all the way back down in a conservative price target to the bottom of this range at $10 again. Now, you can also draw it down to here at $8 again, especially if you're using the 4-hour time frame, but I'm going to be conservative in this video and just let you know in the immediate short term, it looks like we're going to be rushing back down to $10. I'll show you an example. If you've never heard of a Bart pattern, it probably seems a little bit stupid to have a Simpsons character being a technical analysis pattern, but because of the way the crypto markets move, because they move so euphorically, and then we have a redistribution phase, and then, you know, we obviously don't push higher, markets move in these Bart patterns all the time. You can see them in Solana, you can see them in Bitcoin, you can see them in altcoins. You don't typically see them in the S&P 500 because, of course, the Bart pattern is insane volatility happening in the markets, which always happens in crypto. Now, besides this Bart pattern, which would be predicting a drop all the way down to $9.79, which from where we are right now is about a 23% drop, and I do believe this will happen in the next week. I think we're going to get ready to start turning tail, and I'll show you why in the oscillators in just one second. But if you're also a fan of Elliott Waves, you can Elliott Wave your funds goodbye, because we've got a 1, 2, 3, 4, 5-wave structure that has just completed for Solana. Now, I do believe we're going to get ready to put down another macro A, B, C, all the way back down to probably about $8, or maybe breaking down into new lows. Now, the reason why I'm not drawing it as an A, B, and then insinuating that there would be another C wave is because there's no micro wave counts within these wave structures. So, in my opinion, if we're looking at this as a ABC correction, once again, just approximating with this, I think something like this is playing out, where we've got an individual wave count starting for your first A wave. So I believe this is your one wave that's just completed. We obviously need to break beneath this floorboard of about 1280, which we're doing now. So potentially we could drop down to the free wave around about $12, have a small bounce back up, reject the range lows at 1280 before dropping all the way down to, you know, something potentially along the lines of $10, $10.50, which is where we were previously rejected from here. And then with this, we can see an A, B, C back up, and then another macro wave count back down. That's really all the technicals I wanted to update you on. Also, outside of this, the S&P 500 is beginning to break down, or at least it's looking like it really wants to break to the downside of this diamond pattern, or diamond bottom formation is the technical name for this. Doesn't always mean it has to break out to the upside though. And of course, if we come over to Bitcoin daily time frame, just very quickly, trying to make this as quick as possible, you can see Bitcoin is also getting rejected from the top of this bearish pennant. Now, in terms of the oscillators, like I said, I've already discussed these in previous videos, so I'm going to fly through them. The stochastic RSI is starting to flip bearish. The last time this happened, we were basically at $15 before that next major meltdown to the downside. The MFI is starting to turn down around about this 70 range that we previously talked about. And also, if we head over to the squeeze momentum indicator, for the past 2 days we've been switching over into light green, and basically, you know, these squeeze momentum indicator runs up. As you can see, when they turn over green on the chart, it is a sign of overextensions. At least in bear markets, it's a sign of overextensions, because we're obviously in a bear market, so moving into green territory really means that bulls have become overextended. And when we're looking at the charts, whether you're a fan of Bart patterns, Elliott waves, whatever you want to look at, Solana is extremely overextended right now. Previous videos, we talked about how we grab liquidity from the weekly time frame volume cluster right here. Daily time frame, we talked about lower time frames, how we grab liquidity from this volume cluster right here. We also talked about we also talked about how if we are extrapolating out the heart line of the bearish pennant that we just lost a couple of weeks ago, that we have rejected from the heart line once we extrapolate this trend out. Oscillators are turning down, Elliott waves are saying we should break down, there's Bart patterns playing out on the chart, we're extremely overextended, Bitcoin's starting to break down, And as I've started to click record, the S&P 500 diamond pattern has just broken beneath the floors. That's all I've got for you for this video, ladies and gentlemen. If you do appreciate, and if you do like these daily uploads that just take me a few minutes or so outside of the longer analysis videos that I do, let me know down below by leaving a like and a comment, share the videos with your friends, and if you do want more of my content, be sure to head over to my Twitter at 618_cowboy. All I've got for you today, as always, it's been your boy Cowboy Trades. I'm out. Peace.